Welcome to Bill the Lender podcast, devoted to educating you on a variety of financial subjects with an emphasis on real estate and real estate finance. Please click the button to subscribe to my channel so you don't miss an episode. Then like and share your favorite episodes. Hi, everybody, and welcome to this week's podcast. I'm Bill Rodriguez, your host, and today I have Kayla Johnson with First Bank. Kayla Johnson is a loan officer with First Bank of Boulder County, and she's a Longmont native and graduated from Colorado State University with a bachelor's degree in equine science and a bachelor's degree in business management. When she isn't working, Kayla enjoys playing sports, traveling, spending time with her family, and helping out at her church. Kayla has worked in the banking and lending industry for 9 years and has been with First Bank for 7 of those years. As a loan officer with First Bank, she focuses on all types of lending, including mortgages, home equity loans, construction loans, and commercial real estate loans. Kayla, glad to have you. Cool.
Thanks, Bill, for having me.
We are, I'm happy for you to be here. So we're focusing this week's episode for consumers and helping them understand why it's important to have a local lending partner that is a local bank. And what's great about First Bank is they've been a partner of mine now for almost 10 years. And Kayla, and I think you and I have been working together for at least 2, if not more, of those years. I think that's right.
Yeah, 2 to 3.
Yes. And with your experience, you guys just have a unique setup that really makes it easy for me to refer, because that we can't do. So to frame this out for our listeners, a difference between a mortgage bank and a local bank is a local bank is insured by the FDIC, so they take deposits, and they can choose to lend that money in different ways. And there's these commercial business lines of credit and services that you guys offer that a mortgage banker cannot. So for my clients that are business clients, Kayla and I work really well together. I may do their mortgage, or if it's complicated, Kayla's actually helped in a couple of self-employed situations because you guys have portfolio loans. Kayla, can you talk a little bit about what a portfolio loan is and give an example with a self-employed borrower?
Yeah, so a portfolio loan is a loan that we keep on our books. And so what that allows us to do is it allows us to be a little bit more flexible with our underwriting standards. And we still obviously have to follow ability to repay rules and everything. But the lending decision is done in the market. And so either the loan officer or one of our local underwriters will underwrite that file. So it's local decision making. And that really helps to be able to qualify loans that may be out of your typical box of just your W-2 borrower. So a lot of our portfolio loans, we can do portfolio loans for your standard W-2 borrowers. But what they're really made for is those out-of-the-box situations, self-employed borrowers, fixed income borrowers, somebody that doesn't just fit in the W-2 box. And so the portfolio loans are really a way that we can help mortgage brokers, if they're not able to get it to fit into the box, to be able to solve a problem and get a mortgage closed for somebody.
Yeah, and an example of that would be, Fannie and Freddie have a rule that most mortgage banks are sort of hard and fast to this 2 years of self-employed business tax returns and so on. And so this self-employed history. Cornerstone has some flexibility, and I've talked about that on some other podcasts, this podcast as well, to where we can do it with a little bit less, but there's still a minimum for us in that 16 to 18 month time frame, 10 to 12 months being on a tax return. So I've sent deals to Kayla where they have had little less than 12 months or 12 months or 14 months. and she can look at the cash flow of the business and make, her own underwriting decision. I think you guys are authorized up to 500,000. Is that right? Or is it higher now?
There's not necessarily a limit as far as decisions go, but because we have a different tiered approval system. So it depends on the type of the loan amount, but all of our decision making is all in Colorado. So even if it's not coming from me directly, it's still in Colorado since we are a Colorado-based bank. And yes, we do have branches in Arizona and California, but all of the decision making is done in Colorado.
And see, so that just offers a lot of flexibility to my self-employed clients because a lot of times they'll be dealing direct with Kayla on all of their services. So it's a single point of contact. They have that flexibility. And then, you guys send stuff back my way, right? When you guys can't do it. So some of the things that you've sent me in the past, VA, uh, first time home buyer, CHAFA, FHA, is that all of them? I think that's pretty much it.
That's pretty close. Yeah. So anytime we don't do USDA or VA
Oh,
loans.
there you
So
go.
that's
There's another one.
if I ever have customers that come in or even reverse exchanges. I know that you don't necessarily do reverses, but anytime that a customer comes in that wants something that we don't offer or maybe that we can't qualify them for, it's good to have a good mortgage broker partner or a couple so that you can send out, at least I can send out, 3, 4, 5 different names of different companies or different mortgage brokers that have these programs available. And then the customer can call and decide, if it's based off rate or, how well they get along with that person, then they can decide. But at least I'm not just giving them a dead end of, hey, I don't offer VA, but
Right.
hey, I don't offer VA, but here's these lenders that I know that do offer VA, give them a call and they can hopefully help you out with something. So VA, USDA, yeah, some first-time homebuyers. We do have first-time homebuyer programs, but like CHAFA, for instance, we don't have a program with them yet. So it's a good opportunity for me to be able to refer out to other mortgage brokers to get my customer a deal.
Yeah. And so, for your first time home buyers or your business owners, for first time home buyers, one of the services that I wanted to highlight is, sometimes we have folks who have thin credit. So we sometimes will tell them to reach out to a credit union or their local bank and see if they'll give you a secured line of credit where you put some deposits down and then you guys give them a credit card to lend against that. That's something that we've talked about, right?
Yep, exactly.
So, and then from the business standpoint, so your self-employed borrowers, obviously they have all of your business services, your business banking,
Yep.
commercial loans, all of those types of stuff. It's a great partner to have. And First Bank has a phenomenal reputation in the community. And then from your investor standpoint, because I have a lot of investor clients that are watching the podcast based upon some other podcasts that I'm a part of, you guys are really seeing your arms be very aggressive at a time when interest rates are rising.
Yes,
So why
definitely.
don't you talk about your ARM product a little bit,
Yeah.
and then I'll sort of position ours as well.
Sure. So our ARM product, it's not just for investors, but that's where we see most of the ARM business is from people buying investment properties. The reason is because they're longer term holds, but within the next 5 or 7 years, they're probably going to be doing something with that investment, whether it's cashing out to buy more, whether it's doing a line of credit, they're going to be doing something within the next 5 to 7 years. And so the ARM products are a great way for people to be able to get into investment properties or primary residences at a lower rate than a conventional loan typically. And it's not always the case that ARMs are lower rates, but in this type of interest rate environment where rates are very volatile and continuing to rise every day, When fixed rate mortgages are a little bit higher, those ARMs typically are lower, and a little bit more affordable. And you have the risk of the rate adjustment, right? As you do on any ARM, but it's fixed for the first 5 or the first 7 years. And so it gives an investor or a borrower enough time to have that loan fixed in, and then they can decide what they want to do at the end of that time period, when it starts to adjust.
Yeah, when you use an arm, we always suggest to our clients in terms of a strategy, like know how long you're going to be in there. If you're buying this as an investment and you have, a 5-year horizon, then you probably should book a 7-year arm just because it gives yourself a little bit of a buffer in case the market's not favorable for you to sell, circumstances change, and you have some room to be able to wiggle around and position the sale or refinance or whatever you're going to do with that.
Absolutely.
People ask me all the time, why do mortgage banks not have competitive arms right now versus the local banks, which is a really, really great question. And a lot of that has to do with you guys' willingness to, again, take that portfolio money, build this ARM product around, an interest rate, whatever that market rate is, you guys determine that. And with mortgage banks, because rates have been low for so long, there just hasn't been any demand for ARMs. And all of our pricing comes direct from Fannie and Freddie. And since we don't have a portfolio,
Yep.
we're not creating those rates because if we book an ARM and the market raises higher than the rate that we book it, we may never get that loan off of our books. Now, I
Right.
will say, little caveat here, we have just recently become a bank, so we will be rolling out our own products as well. So more to come on that in future episodes. But I wanted to give our listeners a little bit of an idea of, some of the dynamics that having a local banking partner like First Bank is advantageous. Now let's talk about our second question. What makes a local banking relationship more advantageous than a national banking relationship, in your opinion?
I think a local banking relationship is important because, you're not just a number. You're not just, it's not just a transaction. And if you're looking for the lowest rate, then a transaction may be what you're looking for. But if you're looking for somebody that you want to partner with for future mortgages, for a banking relationship, for even maybe a business you're going to start, a commercial loan you may want, if you're looking for that full relationship and someone that you're going to be able to come to over and over for whatever that need is, I think a local bank, and a local banking relationship is important. Because, for instance, my clients that come in, I can help them with a mortgage. I can also help them with their business loans, their commercial loans. I have a team that can help them with their banking relationship. And if they need to get a hold of me, obviously they can call our customer service, but they can pick up the phone and they can talk to me if they have an issue, even if it's on the banking side. So I think you can build a more personable relationship, and some people don't care about that, and that's fine. But a lot of people still want to have someone to talk to and have a relationship, someone they can call with questions. And that is still really important to a lot of people. And so I think that is, one benefit to having a local banking relationship is you have that personal touch still.
Well, and I think, the other piece of that is you guys do so much for the communities that and the loan officers that work there come from the communities that they support. Um,
Absolutely.
the other side of that, I know on the mortgage banking side, they're looking for people who are familiar with this market. If you're looking at transactionally focused for the best cost and the best rate, that may not help you win a transaction in this market because most listing agents are looking for somebody that has the in-house lending control to
Yep.
make sure that they can call somebody locally and not go to a call center should go sideways. They want local accountability. So that is another reason. And I feel like, I know you feel the same way. Certainly my team and I, we're on our third, fourth transaction with some of our clients. Generationally, we're working with their kids. And you just get invested in who these people are and helping them succeed, especially if they're a local business owner, because we're all sort of in this together.
Exactly. 100%. I agree with that.
Cool. All right. So let's talk a little bit about a couple of niche markets and how do you leverage that with your lending partners. So in terms of some of the special things that you guys and programs that you guys do, let's talk a little bit about that so our consumers know what's available.
Yeah. So the biggest one is the ARMs that we just talked about for investors. So a lot of times people that are investing in real estate want to purchase properties under LLCs or
Mm-hmm.
corporations or something. And a lot of those or any can't be sold to Fannie Mae and Freddie Mac.
Nope.
And there's guidelines between owning a property and lending to an LLC, and we can do that.
Mm-hmm.
Uh, lend to LLCs, we can lend to trusts. And so that's kind of a niche market that we've focused on, is lending to LLCs and
Well,
helping.
and then you guys also have the non-recourse loans too.
We do. We have, so for their self-directed IRA loans. And so basically, if you're looking at purchasing a property as an investment property and you have money in an IRA, it has to be a current IRA. There's ways that you can use and leverage that money in the IRA to actually purchase an investment property. And the loan is to the IRA, not to the individual. And so it limits your recourse since the loan is only to the IRA, and it allows you to diversify your portfolio essentially into real estate rather than just the market. And so that's another really cool product. We haven't seen many of them recently, but it ebbs and flows with the market. So, but that is a product that we offer that a lot of investors like to get into.
Yeah, the other thing that I've recommended you guys for is the, and you can talk a little bit more about the program because it's been a while since I've done it, but the commercial lines for real estate where they have over 10 properties for Fannie and Freddie. You can't have more than 10, and then you can put all of those into a line. I believe it's a single deed of trust. Am I right on that? Or do you
So
break?
Well, we have a couple different options. So we can lend to just one property if borrowers own more than 10 properties, just a regular mortgage. We also have it's called a scattered site mortgage.
Mm,
And so that's where it's one deed of trust that encompasses all of those properties.
right.
Um, and so
And
it's
the benefit of that is it starts you back at zero so that you can go back to traditional Fannie Freddie financing if that's what you're looking for.
absolutely.
Yeah. So and that's huge because we have a lot of our listeners, they're looking to grow their real estate portfolio, whether they're, housing hacking, meaning that they're going to live in the property for a period of time as their primary and they're going to rent out rooms or they're going to have roommates or whatever that is, or Airbnb some
Yep.
stuff, versus people who are just straight investors who are in acquisition mode, buying up what they can and they're loading up. And we've moved folks through a couple of those scenarios with you guys.
Yep. And then I would say another area that we focus on a lot that helps more with mortgage brokers is bridge loans.
Mm-hmm.
Um, and so, typically we like to do the mortgage on the back end, but sometimes it just doesn't work that way. And what the bridge loan allows people to do is it allows them to use equity in their current residence to purchase a new property, which in this market can be helpful because they may not be able to sell their current residence before the one they want to buy goes on the market. And so it bridges that gap and allows them to purchase first. before they sell their current residence. And it doesn't work in every situation, but it's, easy enough to run through a scenario and to see if it's worth it and if we can make it work. And that really helps. And then the other kind of niche area that we focus on is, borrowers on, either fixed income or self-employed borrowers, where there may be some limits on debt to income ratio, or maybe they can't qualify for your standard Fannie or Freddie loan based off of typical underwriting standards. But if they have money in the market, like liquid funds, for instance, stocks, securities, bonds, anything like that, then sometimes we can look at the full picture to see if we can qualify a borrower rather than just focusing on the income. And it doesn't work for every borrower, but that is something that allows us kind of a competitive advantage to be able to help borrowers who don't typically qualify based on your standard debt to income ratios.
Right. In this market, you have to sort of think outside the box. So it's like, why having a local bank or in a local lending partner that has a local banker that they partner with is really important, because we're all trying to solve solutions for our clients. Sometimes I've got the best opportunity to serve them. Sometimes they're better served with you. And as long as the client is getting served, that's what actually matters in the way that we do business. So I think that's what's really, really important for people to understand, is that, it takes in this market, it takes a bit of a village to be get, especially if you're out there as a first-time home buyer right now, trying to find a house in this tight competitive market with little inventory, and you got to pull out all the stops sometimes. You really do.
Yeah.
So
and you never want to give your customer a dead end, right? You always want to have, and so having partners that are, other lenders, brokers, whatever you can that can solve that need for them. I mean, that just helps you, exponentially. Even if I can't get the deal, if I have people that I can refer, then the next deal may, come back. So I think
that's it. I mean, you got to look at it from a abundance mindset. Just because you can't close every single transaction, like you said earlier, this program won't solve every problem, but if it can still help someone, it can still solve a problem. And then if I have to refer the deal to you, I know that at some point you're going to return the favor. That's the way that I look at it.
Right.
That's the way I look at it. So if people have more questions and they want to reach out to you, what's going to be the best way for them to connect with you?
The best way is probably by email, which is, my email is kayla.johnson@efirstbank.com. So KAYLA.Johnson @ as in Edward, and then firstbank all spelled out.com.
Fantastic. So if you have further questions after the show, we'll have your contact information in the show notes. Certainly reach out to Kayla, run some scenarios by her, and see if she can help. You can always call me as well. And thanks for being on the show today, Kayla.
Yeah, thanks so much for having me. It was a pleasure.
Yeah, it's always fun to chat with you. And this has been an episode of Bill the Lender's podcast, where we do all things financial service related and how they impact your real estate and real estate finance. I'm Bill the Lender, and until next time, we'll see you soon. Take care. Thanks for listening to Bill the Lender podcast. Please reach out to me with any questions at 303-877-6323.